Looks like the market's in Nairobi on a bit of a roll at the moment. Does this rally have legs? Are we going to see this movement continue?
That's an interesting question. We're asking the same question as well, but it was really sparked off by third quarter economic reports that came from Kenya National Bureau of Statistics, where it says that for the first 3 months, 3 quarters of the year, economy expanded by about 5.4%. So that really gave a boost to the shares, and so everybody is just buying into, expecting to make a little bit of something on the basis of full year announcements.
Well, where we're seeing most of this movement, because it looks like banks have been among the strongest performers on the Nairobi market. Are these banks expected to extend those gains, of course, coming out with results in the next month or two, and we'll see how they performed over 2010?
Well, there's a real possibility that some banks have been overbought. However, the results will bear the majority out. We expect banks to have done anything between 50-60% growth over the year, with a couple doing significantly higher than that, although some didn't quite match that kind of growth. But given the operating environment and how the sector is just pretty much configured, banks are always going to make good profits over the year.
Well, you mentioned the economic recovery last year, 5.4% growth in the first 9 months, and that was a stark contrast to 2009, where we saw droughts in the country, etc. Agricultural stocks, it looks like they've been benefiting also from higher commodity prices and better productivity in the country.
Yes. Well, that's true. Earlier in the year, said with good rainfall, that turned out well in terms of productivity. Commodity prices, as you mentioned, have been pretty much rallying up. We saw the FAO report saying that the food index is at its highest level they've seen in a while, and definitely has surpassed 2008 highs. So that will tell you pretty much the whole story. So coffee, tea, we've seen good returns. Sugar should be expected to see good returns as well. So that primarily that's what has driven especially drive the prices of those stocks.
Now, the company that appears to be benefiting from the increased economic activity is KPLC, Kenya Power and Lighting Company, and of course that makes sense, doesn't it? It would boost this share price.
Yeah, of course. When you have an expanding economy, that means more and more energy is being consumed. On the supply side, they have fixed their costs by contract, but on the demand side, they're able to vary the pricing as it suits them. So that allows them to make huger margins than power producers. That's why power producers may have not performed as well as, for example, KenGen, but KPLC is expected to do well.
Number of companies out with profit warnings recently, though. Those include BOC, that's the gases company, Everready Batteries, and Samir Africa, a tire company. What's behind those profit warnings?
Well, all of them have cited increased costs of doing business, and on one side, and they're not been able to pass on the price increases to their consumers because of competition, either from more competitive products from abroad, or just other local producers being able to, who are more competitive producers. So, for example, Samir Africa citing higher costs of rubber. Everready, on the other hand, they're citing higher costs from zinc. So they're not able to. I mean, they've been seeing their margins thin out, and therefore profitability has been hit significantly.
Margins also under pressure in the cement industry, if newspaper reports are to be believed. Bamburi Cement down 3.5% yesterday. And there were reports this week that margins could continue to come under pressure with new entrants coming into the market and increased capacity from existing entrants. Would you be looking at cement companies in this environment, but also bearing in mind that we do have that Sudanese referendum coming this weekend and lots of cement companies looking at South Sudan as a new entry for growth?
Well, of course, Southern Sudan remains an opportunity, but for the same reasons that they are struggling in Kenya, Uganda, and Tanzania, could be the same reasons that they will struggle in Southern Sudan as well. So that doesn't give so much weight in terms of hope. But I mean, from what you've seen, higher energy costs, higher input costs. And then when it comes to marketing, we're seeing shrinking market share as a result of increased imports. You know, you realize that when Kenya, Uganda, Tanzania moved into the it's now East African Customs Union. We have now a common external tariff that has come down below where it was, say, a year or 2 years ago, which served to protect the local cement industry. But now the CET doesn't offer too much in terms of protection, and therefore they've been exposed to competition and they're struggling a bit now to readjust to the new trading environment.
Johnson, shares in East African breweries up quite nicely yesterday, 6.5%. And this is despite reports coming out that alcohol sales in December weren't very good because of the new alcohol controls bill. Why the interest in East African breweries?
Beats me as well. But I'll think they're just getting dividends from improved. I mean, just generally, like they say in finance, when the tides are high, all boats raise. So I would imagine that is partly what is responsible for the rally in EABL shares. However, for us, we took a cautionary approach and we lightened on the stock because we knew that beer sales will be significantly hit. And therefore, whilst we did the rally, we didn't gain as much from the rally because we didn't completely sell off. We wouldn't want to hold the stock for now in a big way. Therefore, and it's expected as well because media reports yesterday said that the EABLs, I mean, distributors have seen significant losses because they're not able to move their stock as quickly as they were supposed to. So even today, the share price will come under pressure.